kind of kick off, and I think that's probably a decent number to start with, and then as people come in, we can go over a few bits for them.
Yeah, absolutely. So thanks everyone for joining today. Obviously we're having more people join in these first few minutes, but let's kick off as Ru says. So a big thank you for joining us on this AMA session today. We've not had an AMA session for some time, so it's great to be doing this and to be sharing an update in terms of where we are with the Pynk project and specifically on the Seedrs aspect of the raise. We have an hour or so booked. We're not sure how long we're going to go for. We can go over an hour a little bit, but let's see how many questions there are and how many we get through. But we're fairly flexible in that regard. And as I said, it's our pleasure to have the opportunity to speak to you today about what we're doing in the Seedrs raise. And a massive thank you from everyone on Team Pynk for the now 260 investors, I think it is, on the Seedrs platform. So, we're super chuffed about that. Honestly, we weren't 100% sure about how the raise would go, but it's gone incredibly well. So that's very exciting for us. And bearing in mind current market conditions, it's very reassuring. So a big thanks to all the people on this call that have already invested. And we're hoping that those of you that haven't would like to join us on the journey after this call. We think we have about 100 people dialing in today from around the world. As you know, Seedrs takes investment from various countries, UK, Europe, and further afield. It has been noted on our community board that there are other countries that would like to join in future crowdfunding campaigns, so we're working to open that up going forwards. So just some house rules in terms of how this call is going to work. We've turned off the chat function because there's so many people joining the call, it will quickly get out of hand. But we've got the Q&A feature. So you should see the button, the Q&A button on your Zoom menu at the bottom right. If you click that button, you'll get a pop-up. Please post your questions in there. And the big ask from us for everyone on the call is if you can give a thumbs up to the questions that you want to see answered. As you give the thumbs up, it effectively upvotes the question. So I'll be dipping into that question list, and that'll be the priority of questions that we'll go through. So just to reiterate, if you can please give a thumbs up to the questions that you want to see answered first, that would really help us. Before we do that, we're going to kick off with some questions that have already been posted on our AMA thread on our community, just to cover the basics. If you haven't been to our community page yet and you're new to the Pynk project, I'd ask you to do so. So it's community.pynk.io. There's lots of lovely Pynksters on there to meet who will answer any questions you might have about the project. The discussion points in there are all about helping each other to become better at investing and building a financial future together. So do check out the community. It's a fantastic resource for the wider Pynk project. And before we do answer any of those questions, we'll do a few introductions to kick off on the panel. So my name is Mark Little. My job title here at Pynk is CMO, Chief Marketing Officer. My key responsibilities are with regards to recruiting the crowd. So I'm heavily involved in the crowd and the community, and also I'm involved in the product as well. My background is in B2C marketing. I've worked for some very large companies and some smaller ones too. And for those of you that have been following the Pynk project, you've probably seen my name on the Seedrs boards, answering some questions and some of our blog content. Most of our blog content is on Medium. So actually, if you haven't seen our Medium page yet, go to medium.com/Pynk. Again, lots of background information there on the project. We also have on the call my two co-founders, Seth and Rupert. I'm sure you'll recognize from our promotional video on the Seedrs page. We'll hear from those in a moment, from Seth and Rupert in a moment. And we have the fantastic Dr. Stefano Tresca, who I'll let introduce himself in a moment as well. Before we do that, let's hand over to Seth. Seth, if you could just introduce yourself, your role at Pynk, and talk a little bit about how Pynk came to be and the kind of story behind Pynk, just starting from the beginning, because obviously there's some new people to the Pynk project on this call. That would be great.
Okay, yeah, cheers Mark. Yeah, my name is Seth Ward, and yeah, I'm the founder, CEO of what we now call Pynk. My background is I've pretty much only ever done one thing really, and that is create and grow tech startups. And you know, cutting a long story short, most recently I had an exit from a slightly similar business called Scout 7, and when we built that, we were mixing all kinds of intelligence. So we had an element of crowd wisdom, amateur scouts, if you like, all the way up to professional scouts that worked at football clubs. And the purpose of that project was to help clubs decide which football players, this is soccer players, English football, to buy for their teams. So we were helping with their investment decisions. And I've been involved at various levels with blockchain and Bitcoin since going back to 2011, and I've seen the promise that it holds to change a lot of the power dynamics in the world and to really transform finance. And that's where the part of the impetus for creating Pynk came from after Scout 7, and kind of at a more personal level, also seeing people sort of close to me that may have been very skilled and dedicated entrepreneurs, and even very talented with maths, but in later life kind of ended up dependent, simply because of financial illiteracy. So it doesn't necessarily connect to business savvy or mathematics skills. Most people are actually, not financially literate. It's a skill all in itself. And so really what Pynk is here to do is to help everybody build a financial future and to have a say in the investment process, so that we can all be happy with the things that we're investing in, with the businesses that we're helping to grow, and to benefit financially from that process.
Fantastic. Thank you, Seth. Thanks for the introduction. If I could hand over to Rupert, just to introduce yourself, please.
Thanks very much, as the guys have said, for joining. So yeah, some of you may know me, some of you may not. Essentially, I'm Chief Ops over at Pynk. So my main role is executing Seth's vision, and trying to make that happen with the team and build that team and grow it all over the world and go around on stages with Seth and grow the vision. So that's what I tend to do. I do a lot of talking. The guys have to tell me to shut up often, but I have a lot of the answers, or try to have a lot of the answers. And any answers that I don't have, I always try to connect us, the company and the team and any of you guys, with the people that do have those answers. That's that. I suppose does that round it up, Seth, Mark? Is that right?
I think about that sums you up, Lou. Yeah, I'd like to say it's a bit more than that, but yeah, that covers off the basics. And
well.
Sorry, what was that, Seth?
Team mascot as well.
Team mascot, yes. I'm lovingly referred to as the team mascot. Thank you. Mark, what's up?
And last but not least, certainly not least, Dr. Stefano Tresca, who's been with us since day one, is a key advisor for us at Team Pynk. If you haven't seen Stefano's TEDx talk on financial inclusion, I highly recommend it. It's on YouTube. Very much in line with the values of Pynk. So Stefano, if you could just talk a little bit about what you do, that'd be great.
Sure. Hey everybody, this is Stefano from London, and many friends and teammates call me Mr. T. Since you're an investor in Pynk, you can do it as well. About me very fast. I started my career as a programmer. Then I moved to the dark side, and meaning I went to law school and became a business lawyer for 10 years. And 10 years ago, I moved back to my passion of being an entrepreneur. In fact, during law school in the middle of the 90s, yes, I'm so old, I was studying by day and running my e-commerce by night. I've invested in many startups, being involved with multiple exits, some in the UK as well, to Royal Bank of Scotland and a few others, and 3 unicorns, startups with an valuation of over $1 billion. As much for investing, I follow the strategy of Peter Thiel, the co-founder of PayPal. Pick a big market, pick a project that is very good in a niche, and an amazing team that it's fun to work with. The last one is not from Peter Thiel, it's too strategic and cold to say something like this. It's more from Jason Calacanis and others. And that's why I'm here with Pynk. About the work, very, very fast, couple of examples. I was employed number 8 at Wind, a telecom and internet company that made an exit for 12.1 billion. I had the chance to launch 2 online banks in 2 different countries. And I've been involved in the listing of a few companies in the stock market. Next one this November 2020. It's a crypto company, so it's going to be very exciting. And in a few years, Pynk. That's one of the possible outcomes for Pynk. And every year when the papers and the media release the country ranks, such as the United Kingdom is country number 8 for ease of doing business. And if you want to know number 1, drop me an email because I don't want to ruin the suspense. But the UK is not number 1, US is not as well. And all these media base their ranking on a book published every year by the World Bank called Doing Business, and I'm one of the contributors. So thanks to remote working and this background, I had the chance to work and live in about 20 countries. Now I'm back to London since 2010, working with Pynk. So any question you have, I'm here to answer.
Fantastic. Thank you, Stefano. Great to have you here today. So thanks for your time, as always. So we're going to kick off with a few questions that have been posted on the community over recent weeks. And, you know, obviously there's people on the call that are entirely new to Pynk. So we're probably going to start from the beginning and start with the big questions. So the first question is in the area of the problems that Pynk is solving. So I'm going to ask Stefano and Seth to talk around this a little bit. So the question was, what are the big problems that Pynk is solving and how are they going about it? So if you could talk a little bit about that, that would be fantastic.
Seth, you want me to start? You want to start?
Yeah, you go for it first. Yeah.
Well, you see what's happening. I mean, this year, in just 2 months, the traditional industry was damaged without any chance to recover at the same level of before. And we have 36 million unemployed just in the United States and more applying for benefits every day. Of course, the UK had its tools. And I'm not just speaking about, of course, that is really, really bad news. But I'm speaking about economy. And most of these people, they don't have real pension. They have no savings. They have no financial skills. Therefore, they have no financial freedom. So, yes, I did a TED Talk about financial inclusion because I spent many years working in Southeast Asia, but we really don't need to go there. We have the same issue of lack of financial skills and financial freedom in what we call the Western countries, in Europe, in the United States, in Canada, everywhere. So we are speaking about a few billions people. Even in the United States, there are a few million people, tens of million people without a bank account or a credit card. So I believe that's the main goal of Pynk. That's why Pynk, it's not just a good investment. It can make a dent in the universe, as we are used to say, when we are excited about an investment, because through the artificial intelligence and through the community, we can really provide financial freedom to a big mass of people that were not used to do it.
Fantastic. Thanks, Stefano.
Yep.
Seth?
Yeah, not much to add to that. You know, financial inclusion is a huge part of it. We want to empower people and give people a say actually in where the money goes, which you know, seems to be quite groundbreaking. And in the long term, we'll be using, you know, building up a big pool of money and our big army of you know, passionate Pynksters to decide where that money goes, and even to work on some of the solutions to the big problems we see in the world.
Yeah, I just add a comment to that and say, you know, since the beginning of this project, we've always seen that financial education is a key tenet of what we're doing and what we're trying to offer as a proposition. And I've been telling the story recently after the COVID crash. A friend of mine who happens to live in Cyprus, but he's a highly educated chap, qualified lawyer, had some investments, and after the COVID crash, he lost all of the gains and some that he'd made over the last 10 years. And he called me up, asking for my advice in terms of what to do. Not that I could give him any particularly good advice at that point in time, but this is a problem which, you know, I think retail investors are suffering the world over. It's incredibly difficult today to build a financial future for yourself working individually. And, clearly our approach of our collective approach to investing, which we're terming social investing, is a better way to go about it. And part of the proposition is about educating yourself and educating each other, and Pinksters helping each other out over time. So we started with the big problems, just to cover the bases. I'm going to move on to the next question now, just in the interest of time. So one question that's come up a couple of times recently is, where do we think Pynk will succeed where other crowd businesses have not? And specifically, I think this question is pointed at other crowd wisdom businesses. So Stefano, Seth, again, I think this is an area you can probably both give a bit of insight on. So the question was, why will you succeed where other crowd businesses have not?
Well, I mean, there aren't too many examples of crowd businesses. I think one big distinction is that we're building this system where we all kind of grow and learn and earn together. There are other examples of crowd wisdom where the focus is simply selling the data, and it's kind of a fun learning experience. But we have a huge mission here. To actually, change people's lives, and I think people are, our crowd members are recognizing that, and we, at a more fundamental level, we have a better financial model, in my opinion. We're focused on AUM. I'm sure we'll touch on this later. We will be generating a lot of money from larger institutional investors, which allows us to return value and subsidize the smaller investors, so that basically everybody wins.
Fantastic. Stefano, do you want to comment on this question?
So the question is, why will you succeed, you as Pynk, where other crowd business have not? Exactly. Well, why Facebook succeeded and MySpace is dead? And again, yes, I'm so old that I remember MySpace. Because Facebook had a specific angle and a specific niche, MySpace was generic. And because Facebook had a specific vision, MySpace did not. So with Pynk, it's quite the same. There are no other crowdfunding, crowdsourcing and trading companies out there where the artificial intelligence is working with the crowd. In fact, everybody is afraid that artificial intelligence are making people obsolete. So Pynk at the moment is the only exception where artificial intelligence and humans are working together and empowering each other. So,
fantastic. Okay, thanks, Stefano.
Thanks. Yeah, I was going to just add on to that one. Well, actually, I was going to ask another question back to Seth based on that, because there's always this big confusion with Pynk, and we get this question all the time about the wisdom of crowds and what Pynk does, because obviously people just naturally assume that we're wisdom of crowds, but that's only a really small part of the picture. But Seth, are you able to kind of explain like the difference of wisdom of crowds and what we do?
Yeah, so at its core, if you study the wisdom of crowds, it tends to just ask a large group of diverse people to predict something, and then it takes the average of the entire crowd and uses that as the prediction. So we absolutely don't do that. We believe that in financial markets, that isn't a super useful thing to do. It doesn't give you a huge edge. We actually need to find the relevant pockets of wisdom that apply to the particular investment decision at that specific moment in time. And that's a huge job. It's almost impossible to do with tens or hundreds of thousands of predictions coming in by humans. But that's, obviously that's the superpower of AI, which is spotting these patterns amongst huge amounts of data. So that's what we do. We find these pockets of wisdom in real time, all of the time, so that, every time we ask the system what we should do, it will be paying attention to a different group of people that it thinks will be correct at that moment in time. And that's the wisdom in crowds as opposed to the wisdom of crowds.
Great, thank you for the explanation, Seth. So I'm going to jump into a question on the Q&A tab now, as we've got quite a few questions coming through. The first one is from Mohammed, which has been the most upvoted. So the question is how sooner we can expect to see the update in the Pynk beta app. So I think this is a question that I can take. So some of you will have seen on the Seedrs page in our most recent pitch deck that we have an updated UI and UX and a new look and feel for our beta app. So that's one thing, but that's not the most important thing that's happening. The most important thing that's happening and about to be released very soon is something we're calling the Fantasy Fund Manager. So it's a new prediction game, and the way that it works is it sits alongside the prediction tool, but it gives you the opportunity to manage your own fantasy portfolio, virtual portfolio. You're given a pot of virtual money to play with, and then you can select any asset class that you so wish. And the idea of the game is to drive as high returns as possible every quarter. And of course, this is another way for you to earn wisdom points, but it's another way for Pinksters to become more educated in the area of becoming better at investing. So it's about learning through doing. That's the idea. So we often get asked the question about, are we going to launch an investing academy of some sort? And you know, we've discussed this at length. There's not really anything we can do in a sort of traditional academic sense that isn't already available online. And our approach to financial education is actually a learning through doing type approach. So what we're seeing in the data is that as Pinksters are making more predictions and using the beta product more and more, they're becoming better at making predictions, forecasts, and becoming better at investing. So this new Fantasy Fund Manager product feature, which is coming out on the 1st of July, is designed specifically to help people become better at investing through doing in a risk-free environment. Now, obviously, one of the reasons that we built this feature and this new product is so that we can collect the data on the back end. And again, it's more data points that feed into Rose AI, making the AI more sophisticated. So this is the next step in our journey in terms of the crowd wisdom aspect that powers our investment portfolio. We'll talk more about the investment portfolio in a moment. So that's the next big release. Mohammed, it's going to come very, very soon. We hope you like it. We're going to be posting releases on the community over the coming weeks just to seed it in and get initial feedback. And then I must mention the next big product release in our roadmap, our innovation roadmap, is the investor wallet. So we know that Pinksters are crying out for this and have been waiting for it for a long time. So apologies from our side. We've had some quite big setbacks this year as a result of the COVID crash, and definitely it has halted our progress in that area. What we've been working on, and we've been very open about this, but what we've been working on is a regulatory solution with the regulators in the UK who are the FCA. And we have that in place now, and we're just finalising on that. And the next big build for us will be the retail investor wallet, meaning that investors can come to Pynk and invest their hard-earned money and enjoy a return on that investment. So we'll talk more about the structure of the investment portfolio inside the wallet later in this call. So, Mohammed, I hope that answered your questions. Seth, do you want to build on that, or did I cover it off okay there?
No, I think that's kind of fairly succinct. The only thing I would add is that we are always adding bits to the product. Anyway, that's the major release that's coming up. But there's even, I think there's some new assets about to be launched on the platform in the next couple of weeks. Yeah. Which is quite an exciting step for us to get the additional data and the predictions and the opportunity for people to earn more wisdom points on that. But yeah, there's always stuff happening, that's for sure.
Okay, fantastic. So I'm going to jump back to the questions from the community now. And the next question was about competitors. And I think this is one that, Seth, you'd be well placed to answer. And that is, how is Pynk different from the likes of, let's say, Robinhood, Free Trade, but also Nutmeg, who are an investment wealth management app in the UK and Europe, and the other one that comes up a lot is eToro. So eToro have their copy trading kind of social investing approach. So Seth, could you just give a summary as to why the Pynk approach is different from the Robinhoods, the Free Trades, Nutmegs, and eToro?
Yeah, sure. So, I mean, these apps, some of them have been, fairly groundbreaking in their time, and they've done very well in helping people to get in this space that may not otherwise have invested. But if we look at kind of the first of all, the more traditional wealth management apps like Nutmeg and Wealthfront, etc. They are actually very simple in terms of not just the feature set, but crucially the investment approach. We've actually mapped out the makeup of their portfolios, and they're actually almost identical. And what they do is they choose up front a selection of assets that they will always invest in at the same level, and they're pretty much locked into those. So, you know, they're very much passive investment vehicles. And where you see that we're different, we've designed things so that we can, you know, alter and modify the makeup of our portfolio. And that's something that we will be bringing the crowd and the AI in to helping to choose how many of a particular type of asset we have. And we're able to change that according to market conditions. So we'll have seen recently a really good example of the benefits of that difference, in that, you know, if you were, you know, one of the guys in one of these other companies, perhaps in their investment department, in their investment committee, you might have been looking at the market and saying, you know, it wasn't very attractive time to be buying, you know, 60% equities and 35% bonds and a few commodities, because everything was rather overpriced. It was looking as though, you know, the market may suffer, and the yield, the likely yields over 10 years were looking, you know, pretty much non-existent. But those guys would not have been able to avoid purchasing that same mix of stocks and bonds for any new investor that's coming in, and they couldn't sell them on behalf of investors that were already in and maybe have realized a profit. And we can see that. I think, Mark, you might actually have a chart there that shows this, that you might be able to share, that, you know, based on our mapping of what these guys have in their portfolio, they're looking at, you know, losses over the last few months, whereas our portfolio, which is more flexible, is actually about 11% in profit year to date since January. So we're very flexible in terms of the way that we can manage people's investments, and that carries through not just to having this portfolio that everybody has access to, but in future versions of the investor wallet, we're planning to allow you guys and any investors that come in to have more of a say over their individual portfolio. So if you want to veto certain asset classes, or, you know, have more of a particular equity, our system is designed from a regulatory perspective and a technology perspective for us to be able to manage that for everybody with individual portfolios at scale.
Great. Okay. Thank you, Seth.
And then if we look at, I think eToro was mentioned as well, which have obviously broken ground with social investing. I think the key difference there is that, you know, as a user coming in, you can either make all of your own trades, which of course is highly risky. The majority of us, when we're doing our own trades, you know, even when you're a professional fund manager, you're not going to outperform the market over time, not consistently anyway. And you know, for less experienced investors, we're likely to lose big chunks, if not all of our money. And so eToro have you know, come up with this copy trading idea, where you can come in, you can see the users that are currently performing best of all with their investment strategies, and you can tell the platform to simply copy what they're doing with a certain amount of your money. And so in theory, you know, that's a great idea. But often what's likely to happen is you're going to copy someone that's done particularly well up to the point at which you search. And, you know, by the time you join them, you're less likely to get that outsized performance at the very least. So there's a bit of a similarity with what we do, in that our system is looking for people that are doing well or likely to do well, and it's automatically allocating bits of the portfolio or bits of the trading decisions to those users in real time by scanning, you know, endless amounts of data and predictions. So it reduces that risk of copying someone and then their performance falling off a cliff.
Fantastic, thanks, Seth. So I think now would be a good opportunity to talk a little bit more about how the product works in terms of the AI. So I'm jumping into the questions on the Q&A. I've got a question that's come to the top from Mr. Louis-Stéphane. I probably pronounced that wrong, so apologies if I did. But the first question was, can you talk around how the AI works? E.g., I understand the crowd he understands the crowd make predictions, but how does the AI compute that data? Is the first question. So could you have a crack at that, Seth?
Yeah, sure. So there's all kind of things that the AI does, and we're improving the models all the time. But if we're trying to explain it at a real top level, the key thing that it's doing is looking for patterns in prediction accuracy. So if it spots a user, has always done very well at predicting a particular asset, it will increase their score for that asset. So if you think that, when a user comes in, they have no track record, or, another user may have made 10 predictions and 5 of them were, 50% off in one direction, the other 5 were 50% off in the other direction. Those users will have basically a 0 score. There's no positive or negative likelihood of them having any accuracy in their next prediction. If you compare that with a user that has made 20 predictions and they've all been very, very accurate, that user will be increasing, well, the AI will be increasing their weighting every time by adding, and giving them a more positive score. Someone that is consistently incorrect will be getting a more negative score. And of course, what this means is that the users with the highest number, whether it's positive or negative, we just pay more attention to them at that particular point in time for that particular asset. So positive users, we do what they tell us to do more of, and someone that's negatively correlated will flip their prediction and do the opposite.
Thanks, Seth. And is it, could you talk a little bit about how the AI works to eliminate both noise and bias? Sorry to put you on the spot there because it's a tough question, but from an academic perspective, in wisdom of crowd methodology, the difficult thing to do is to eliminate individual human bias and noise at the crowd level. So Seth, if you could just explain the basics around that.
Yeah, so the key contribution that using the crowd brings to financial predictions is the elimination of bias. So that happens already to an extent, but there are a variety of bias reduction techniques that you can apply, and that's fairly standard in AI, and we're continually testing which of those to apply. And currently, we're using 3 different algorithms in our live model, a variety of random forest and SVM and other factors, and then put me on the spot with the noise reduction.
So it's a tough question. Sorry, sir.
But yeah, that is AI is most relevant with noise reduction. I can actually post a link to an article from Wharton and INSEAD professors that have recently been studying the Good Judgment Project in particular, which has been going on over the last 10 years. And they have come to the conclusion that actually the biggest step forward that you can make now with using crowd wisdom is to apply noise and bias reduction through AI. And in fact, that article was only published a few months ago, and we've actually been working on exactly that for a couple of years now. So it's a real tick in the box and indication that we're on the right track.
Am I right in saying the INSEAD academics called us for a meeting? Is that right? They wanted to find out how we were doing it.
So there's behind the scenes discussions going on. Yeah, we may be getting them involved.
Okay. One final AI question, a bit simpler, Seth. You'll be glad to hear. Do you make the AI predictions public? How can we monitor the performance of those AI?
So we don't currently make the predictions public, but of course the results of the predictions are there for everybody to see. We may add a time lag in future and publish certain signals. But of course, if we are to make the predictions live in real time, it undermines the whole project, because that allows then anybody to see what we're doing and potentially trade against everybody. This is something that some of the other wealth management and trading apps do. They share users' data and trades with big institutions to actually trade against them, which is not something that we do. We do work with institutions, but everybody is working in alignment, and we're making profits together.
It's a symbiotic business model, as we refer to it. So if you want to find out more about that, then do go to medium.com/Pynk, and our last blog articles on exactly that topic. Okay, so the next question, guys, is for Rui and for Stefano, and it's from Al Wallace. So hi, Al. Al's a very active community member and has been with us since I'd say the very start. So hi, Al. Hope you're having a good day. And the question is, for those of us who are new to investing on the Seedrs platform, could the team explain a bit to us how buying shares works there? And will the shares that they invest in be tradable at some point? So i.e. a secondary market. As the company gains value, will you see that reflected in the shares that are purchased on Seedrs? And any other insights you might have for us on investing on the Seedrs platform? So I know Stefano has got some good experience on the Seedrs platform, and as has Rue. So I'll hand over to those guys.
Yeah. Well, I'm also an investor in the Seedrs platform itself.
That's true. Yeah.
that helps. So Seedrs works. So I believe there are two answers here. How the share works? Well, it's the UK. So together with the United States, it's very simple, very straightforward. The corporate law it's excellent for startup. The shares can do a bit of everything, and that means that in the case of Pynk, since we work together on how to structure Pynk, the investor is especially protected. So, for example, if tomorrow come BlackRock and buy the company for a few billions, you are not going to be kicked out. And there are some. I don't want to go too much legal because it's boring. But you can drop me an email and everything. Go do a specific NA. But it's a sort of things born for the startups called, for example, tag along and so on, that really protect the investor. Specifically for Seedrs, so the shares, yes, can be traded. They can be traded on an initial stage, sometimes on Seedrs itself, because Seedrs a couple of years ago created its own secondary market. So there are three options you can trade. The first one is someone buy the company. The second one, and you receive the money, and you can be part of the whatever happened with the negotiation of the exit of the company. So you're not going to be left out. Happened to one of my investment, Free Agent. That's an accounting software. It was acquired by Royal Bank of Scotland, and it was also at one point on Seedrs. So second thing, of course, IPO, initial public offering. At one point, the company may decide to go on the stock market. That's quite a possible outcome for companies like Pynk. And what happens is that your share are going to be the same, but are going to be traded on the stock market. Again, another company I have shares, Zoom, that we are using now. So on the stock market, I can sell the share anytime I want. That partly I did to invest in other projects. Third option, and that's very specific of Seedrs. Seedrs has a very high level of regulation in the UK and in Europe as a consequence. And therefore, they have their own secondary market. Not all companies are authorized to trade on secondary market, but especially company growing fast as Seedrs can decide to do that. And in this case, there is an evaluation of the company, of the shares of the company, made by Seedrs based on the performance. And you can, every month, you can, in a way, buy shares or offer your shares to be sold at a fixed price. That's the difference with the IPO.
I just wanted to double check on that, because this is actually this is a good question, because obviously everybody here they're investing on the ASA, essentially a convertible note. Will they be able to trade their shares now on the secondary market, or after the secondary note has converted, which is 12 months time?
So the moment because you have at this stage, you have a big discount on a convertible note. The convertible note is basically an option to buy shares. So they got transformed in shares usually when there is an investment round, the following investment round. And the reason why they were born, and they are the most common instruments used to fundraise startup at this stage. So when it's still like 2 million, 1 million, something like that, or even at the very beginning, like 150,000, they are very, very common. It's because at this stage, it may take a huge amount of time decide how much money Pynk it's worth, and a very long negotiation, and everybody's going to lose an option. It's opportunity. So what you do, in fact, it really started to be used and to become popular in Silicon Valley. That's where up to 10, 15 years ago, it was basically together with Boston, the only place where startups were really growing. And how it happens is that your shares, your option got transformed in shares, either the moment that Pynk do the next round in 12 months, or because someone come and say, yeah, I'm a big venture capital, I'm Sequoia, I want to invest. I believe you're now worth 100 million. And at that stage, even if the 12 months are not expired, again, because you are protected as an investor and as community, your option become automatically share at that bigger price that Sequoia Capital or whoever is open to pay. On top of that, you got an extra 20 or 25%, 25% extra if you buy now, if you invest now, and 20% extra if you invest later, when the first million of investment is done, and it, of course, people is investing, so the option is smaller and smaller. So I don't see anybody trading the shares as if they are in the stock market now and in the next few months, but the potential to have tradable shares is there. I don't know if this was clear and answered the question, or if you want to go a bit more into details.
The question mark.
I think we can potentially go live with the secondary market once the shares convert, is what I believe is the case.
On Seedrs. Brilliant. Okay.
Okay, thanks for the answers, guys. On the Q&A, if you've got any more questions specific with regards to the share class, the convertible note, how the Seedrs raise is working, please ask on the Q&A and upvote that question. Rue and Stefano and Seth are well placed to answer any of those questions. I believe, Rue, we have a special friend of Pynk on the Q&A, Dirk.
Yeah,
we said we'd give Dirk the opportunity to ask his question directly. So Dirk, have you been able to give him hi, Dirk?
He's on.
Great.
Buddy, how you doing?
I'm very well. Well. Thank you for the time here.
Well, thank you for your investment in Pynk. We very much welcome it. And for those watching, Dirk, I think he was our very first German investor.
Yeah. Well, hopefully, maybe hopefully more now.
Yeah. Well, there are definitely a few more. Anyway, what was your question you wanted to ask?
Yeah, I had a long-term question. If you want to take the technology of wisdom of the crowd, at some point, away from investment and into other areas, such as betting maybe, or governmental decision-making and other areas, because I believe that the concept can be applied to many other areas.
Yeah, that's a great question. So who wants to take this one? I mean, I have an answer. Maybe Seth, you're well placed.
We all got.
Hopefully they're the same answers.
to this one. Seth, go ahead.
My simple answer would be, the potential is almost limitless. It is already being used to answer almost any question. It's simply enables more accurate predictions of the future. So yeah, we can go into certainly major global events and betting or predicting the outcome of sports, matches, etc. But we are at the moment very focused on financial freedom, on helping people to protect, build and protect their finances for themselves and their families. So at the moment, I don't think any of those expansions are imminent, but it doesn't mean that we couldn't license the technology to somebody else that was doing that, or potentially move into that space ourselves.
Yeah. So I think in the world of startup, you have to be very focused in those first years in terms of what you're doing. And people in startup talk about the sharp edge to your sword, and clearly investing is where we're starting this journey. There's no reason why we can't use the technology to broaden out into other fields. Thanks for the answer, Seth. I'm going to move on to a question on the Q&A from BJ, who is from Nepal. BJ, I hope I pronounced your name correctly. But the question is, many investors are not able to invest at Pynk because Seedrs only accept the investments from limited nations. So I think from memory, Seedrs accepts from UK, Europe, and then there's a list of another 24 countries around the world that it accepts investors from. And we've had this feedback on the community as well, is that there's lots of Pinksters and people new to the Pynk project who've wanted to get involved in this crowdfunding campaign but haven't been able to because of the country they reside in. Is there any chance to open it up to other countries in the future? Seth, I know you're having a think about this plan, because the answer is we certainly want to.
Yeah, absolutely. I think everyone knows we're about bringing everybody in, wherever you are, whoever you are, giving you the opportunity to both invest, into the portfolio, but also to join in with the business itself. So yeah, we've already been working on that. We've spotted a really promising potential solution a week or so ago, and Ru is deep into investigating that, and they certainly have wider global reach than Seedrs. But it may be that we need to run with a few different companies to get total global reach. I don't know if you've got anything to add to that, Ru.
Just to jump in a bit, this is not the fault of Seedrs. It's international regulation, and what they call portfolio. Yeah. So the chance to move a law into another country. So EU, of course, it's kind of easy. No, it was not super easy for Seedrs, but they did it. Other countries, we have to find our own solution, because simply the regulation doesn't allow this kind of platform to accept everybody yet. It will at one point, but not yet.
Yeah, that's exactly the point I was going to make, Stefano. Seedrs is, by all means, is still a startup as well. They started around 10 years ago, and I remember them kind of coming onto the scene here in the UK. And as a startup, you have to choose which market, especially as a financial technology startup, you have to choose which market you accept capital from first, and then you gain the regulations in that particular market, and you expand. And Seedrs have done a jolly good job. But yeah, we actually realised sometime after we had agreed to going on that platform that actually the whole crowd couldn't invest. So yes, there's definitely opportunities we're working on to get everybody into the platform. But obviously, moreover, is our own opportunity, our own investor wallet, which is coming out towards the end of the year. We need to get that open, and we need to allow our entire community to be able to access that and benefit from the returns that the predictions and the crowd wisdom and the wisdom in crowds is creating. So just wait, hold on.
Yeah, we're getting there. We're working as hard as we can, and thanks for the answers there, guys. And I'll just leave that question with one final comment, and that is, we've talked a lot about as a team building this kind of decentralized cooperative around the world, whereby the users are the owners of Pynk. And if we can do anything to make that vision come true, then we're going to do it, because it's really important to us that Pynk, we say it's built by the people for the people. which sounds a little bit cheesy, and we need to work on better taglines, but it's absolutely true. That's the underlying ethos of our company and what we're trying to achieve. So if we can bring more crowdfunding opportunities to people around the world to get involved in Pynk and to become shareholders, then absolutely we're going to do that. So we'll keep you posted on progress in that area. Okay, so I'm jumping on to the next question. It's from Mohammed. Hi, Mohammed Nadeem.
You've missed Al's question at the top there.
Well, I kind of feel like we covered that off. I'm not ignoring Al, but I think Stefano talked a little bit about why he's attracted to Pynk. Unless Stefano, you want to cover off that question again, but I feel like we covered that off, to be honest. So the next question from Mohammed was, are you guys going to invest in a new startup project outside of the UK? Sorry guys, my internet is slow. I'll watch on YouTube later. Hi Mohammed, later when you watch this back. But the question is, are we going to invest in other startups outside the UK? So Seth, I know this is a subject close to your heart, so if you could take this one.
Yeah, absolutely. We've started with very short-term trading. There's a simple reason for that. When we launched this business, the whole world was very, very skeptical about, the potential of crowd wisdom and AI in financial investments. And we knew that we had to prove
people that we talked to.
We knew we had to prove it. And the only way to prove it really is to build up data points as quickly as possible. So that's one of the main reasons why we've initially focused on this short-term day trading of a small number of assets, so that we can prove that it works, we can build momentum, we can build credibility, but ultimately, we aren't just offering this short-term trading system to people, to investors. We're offering a diversified portfolio. It's a safe way to invest. We are safety first. We're about protecting everybody's money before we focus on profit. So we've built everything around that, and so gradually what you'll see is that the two products at the moment. One is the trading product where we trade every day. Two is the portfolio product where, similar to Nutmeg, but in critically improved ways, we have exposure to stocks, equities, bonds, property, precious metals, everything. The long-term goal, and this is the bit that really gets me most excited, is in exactly as you say, Mohammed, it's investing into startups. We want to give people like ourselves an opportunity to decide which are the most promising projects and which are the most exciting projects, which are the ones that are going to solve real major problems, which are the ones that are going to change the world for ourselves and our kids. And we will be putting money into those projects and contributing to those projects as a crowd. There's a lot of skill and experience and wisdom within the crowd. That's what we're all about. And so whenever we can access those pockets of insight and wisdom and skills, we'll bring those into those projects that we're invested into and make them a success and actually achieve some real good in the world. And that's the bit that gets me most excited. And from, when I've spoken to a lot of you guys in the crowd and investors, it seems to be what gets a lot of people excited as well. So absolutely.
Fantastic.
And just to round off on that, in terms of just gauging expectation, that there are significant issues when actually trying to execute that dream. And as you remember from the beginning of the story, that's what I'm here to do. So we are working through that. It's a regulatory issue. It's a liquidity issue as well. And so the planned execution date for something like that, and that being opened to the investor wallet and the crowd and that sort of stuff, we'll probably start gathering data, hopefully mid 2021 towards the third quarter, Q3 potentially. But we wouldn't actually start investing or knowing which companies are better bets than others before we train that system up a little bit. And so that's going to be at least, at the very earliest, Q4 2021, may even slip into 2022 there.
And it will start small. We'll be talking about 1 or 2% of the overall assets under management initially, and it will grow slowly but surely. And I think, in the long term, it may well be where the bulk of the money goes, but that's over the course of years, not months.
Okay,
Still, it's
fantastic.
worth to join now, because the moment that you have a startup to propose, that could be yours or could be the startup from one of that you believe in. The moment that you start now, where the company is small and the community is already big and growing, you develop this understanding on how Pynk works. So the moment that in 2021, more features are going to be added, you will be already well schooled about what you can do and what you can't.
Yeah, there's also some potential partnerships with companies like Seedrs, where we can do proof of concept and funnel money into other listed startups as as a stopgap measure. So we're just starting to think about that and talking to some of these guys about that as well.
Fantastic. Thanks for the answers, guys. And I'm just going to throw in a question for myself, for Seth, just to give you the opportunity to talk about ESG. So in what you've talked about there, what effectively is happening is we're giving power to the crowd to deploy capital into the projects that they see fit, that have the potential to do good in the world. What's your kind of view and longer term vision on ESG and investing, Seth? Can you talk a bit about that?
Yeah, it's super important. One of there's all kinds of reasons that I've given for why we're doing this, and really it comes down to nobody was doing investment the way that I wanted it to be done, and part of that is that you can't really find a safe, diversified investment portfolio where you actually get input into it, where you can say, look, I don't want my money going into, for example, fossil fuels or weapons or guns or animal agriculture, and people are passionate about these things, and it actually stops a lot of people from investing, because the only solution to that is to do everything yourself, and that is the most risky and time-consuming way to do it. So what we're building, we're making sure that from a regulatory and a technological point of view, as I touched on before, we can have these flexible, personalized portfolios for everybody. And what that means is that, you as an investor will be able to shape the ESG, the ethical investment policy of our portfolio. And I believe that's the first time that any kind of solution like that has ever been put together. And it's a huge ambition, but it's one that we can achieve. Fantastic.
Okay, thank you, Seth. So we've come up to the end of the hour. Most people are still with us, which I think is a good sign. So I think we should go on a little bit. There's 2 or 3 more questions we'd definitely like to answer in the Q&A board. So the next one is from Frank. So his question is, which of the 3 target markets, in brackets, retail, etc., so that'll be retail, financial, institutional investors, and other revenue streams, I assume is the question, is going to be your core, and why? Roo, is that one that you'd like to take?
Yeah, happily. So thanks very much for the question, Frank. It's a good one. And it's something that took us actually some time to get this model correct. But the easiest way to answer it is actually our core revenue stream comes from our tier 1 institutions initially, and we're actually working on a deal right now that's worth about 500k in the first year, about 1.5 in the second. So we're looking forward to closing on that very, very soon. And so that's that tier 1 institution that we're working with is actually more around our data, but we're not kind of trading signals necessarily with them. What we're doing for them is helping them with information in order to write reports for their customers. Their customers are people like Volkswagen Group, as an example, who would be buying millions of dollars worth of parts in a different currency, and they'll have lots of different pots of capital around the world. And so they want us to predict on FX, certain FX pairs. So we'll, if this deal comes off, we'll release to the community certain FX pairs that we want to predict on, and the community will obviously be rewarded because of that. And they will, and then we'll be able to help them create these reports for their customers to then sell in and make more money. And the reason we do that is that actually these tier ones and institutions, and this particular one has about $2.8 trillion of assets under management. They're very, very large. They have huge amounts of assets. That's the main reason, because we want to create a relationship. We are a small startup. We have small amounts of data that show how well the Pynk project works. And whilst that's very easy for us to explain and tell to retail or everyday investors, it's much more difficult. We found this out very, very early on, that we need to have years worth of data for those companies to feel comfortable to put large assets with us. So how do we do that? Well, we start the relationship now with a very small amount of data, and we grow that relationship over time. So we're expecting in sort of 2 to 3 years time that they will place around 200 to 300 million in terms of assets with us that we will then manage for them. So that is where a lot of money is made from, is from those assets and that data. Now, from the retail public, we don't make any money. We charge a zero fee wealth management because we're trying to make this a symbiotic relationship between institutional, high net worth and family offices and the everyday person on the other side. We truly, truly believe that our system allows people to provide data and get a fee-free investment portfolio that performs exceedingly well, whilst the institutions are able to have a portfolio that performs exceedingly well from the data that everybody's putting in it. So it's really bringing everybody together. That's the system. So I've probably gone over on that one, but does that answer it, Mark?
That was perfect. Couldn't have answered it better myself. So thank you, Roo. Just to reiterate, for those on the call, if you want to find out more on that, then do go to our medium.com/Pynk page, and we've written a few articles about the business model. And I just make the point that we see other fintechs which have quite high valuations, but don't have a very definable business model in our view. And I think we're quite happy about the fact that we have designed this business model in this way to serve Pinksters around the world. As a team, we come from a long background of running businesses, and so we take a very commercial approach. We have to take that commercial approach to see longevity in this project. So thanks for the answer, Roo. Okay, another question from BJ has just jumped to the top. What's the difference between the shares of Pynk at Seedrs and the shares that we've got from beta.pynk.io by contributing to the Pynk crowd wisdom system? So I can take this one. So the difference is the shares that you're purchasing on the Seedrs platform are shares which make you a shareholder of Pynk the startup, or the holding company behind Pynk the startup. So, as founders, Seth, Roo, myself, we have shares in Pynk, and what we're doing is we're opening up those shares so that other Pinksters can become shareholders. That is the crowdfunding process on the Seedrs. The shares that you're earning in return for your predictions on the beta product, we're calling them shares. The language is a bit confusing, so apologies, but essentially it's cash value that's going to open up in your investment portfolio when the retail wallet opens later this year. So for those Pinksters that have been in the project for some time, they'll have been accumulating wisdom points. Those wisdom points exchange for shares at the end of every quarter, and those shares will translate into monetary value in the investment portfolio as soon as the wallet opens. And we're going as fast as we can as a company to get to that, because we understand how important it is to our Pynk crowd around the world.
It's important to kind of point out on that. Of course, yes, you will have the opportunity to draw down on those shares immediately as that wallet opens. But hopefully you've learned with Pynk and inside the community that it is better to, when you have an investment, to keep it in there for some time and obviously diversify that investment as well. And obviously the advantage with Pynk is that we automatically diversify that. So, but it's, of course, it's up to you. It'll be your capital when it's put into the wallet.
Yeah, so I hope that makes sense. If it doesn't, then jump on the community, fire some questions there, and other Pinksters will help you out and clarify. It's a little bit complicated when you're new to the project, but when you're in it and you understand it, it does make a lot of sense. The next two questions are from Louis. Great questions, thank you, Louis. The first one was, how robust is the back testing on the alpha product? So we've got some charts on this to share, actually. So I think Seth and I can take this. I'm going to share my screen quickly. because you will have seen some of the performance in the pitch deck. Let's go through the detail because it's important that people understand what's happening here. I'm just trying to get my screen zoomed in a bit. Can people see that chart, or is it still too small? It's okay.
Well, you could do with zooming in a little bit there, chap.
Yeah, my computer's a bit sticky when it's on Zoom. Here we go. No, that's gone the wrong way. Bear with me, everybody. Okay, so this chart here we showed earlier in the call, and we call this the Alpha Investment Product. This product is our managed investment portfolio that retail investors will have access to when the wallet opens later this year. It's a fully diversified portfolio. You can see the diversification in the pitch deck, which is available on the Seedrs page. And it's diversified across all asset classes. So namely bonds, commodities, FX, cash, a little bit of crypto. And this product is designed as a retail product. It's for everyday investors to come and invest their hard-earned money and enjoy a return every year. We're targeting 15% returns a year. And you can see this year we're already at 11%. And if we look at our performance versus the competitors, Nutmeg, Scalable Capital, Moneybox, all of these companies are just over the 0% mark. And the reason for that is they tend to take quite a blunt approach to investing. It's called a fund-to-fund approach. They take retail investors' money and then they deploy that into other ETF products. And it's a little bit blunt and unsophisticated. What we're doing is much more sophisticated, much more considered through the crowd wisdom system with final expert input from our investment committee. And you can see the results are really telling the story. So we're very happy with the year-to-date performance, and we are streaks ahead of our competitor set, which is encouraging.
Can I just add on to that?
Absolutely, we're going.
Obviously, Louise is specifically focused on the back testing. This chart is all live. So we've been trading this since February of 2019 with our own capital in-house. Now, that is not a back-tested chart. When it does come to back testing on data, the only date that we can go back to is, I mean, with real certainty, it's kind of February last year as well. We can push it to October the year before. And the reason why that was is that our back testing relies upon the data from our crowd. And we only started gathering data from our crowd in October of 2018. And so if we were to, well, there's nothing to back test beyond that. The data from October to February probably wasn't that great or relevant, which is why we tend to do it from February if we are back testing anything.
Yeah, thanks, Ru. And then just to be clear for everyone who's not so literate in finance, you know, back testing has its limits. It's a bit of a theoretical exercise. So, you know, in these charts here, we look at a live investment period, you know, which obviously is much more accurate. Now, in the pitch deck, you'll see that the investment product, there's a percentage, a small percentage of it, that is made up of our day. It's essentially a day trading product, and it's following only the signals of Rose AI, and the performance of this is really very, very strong. So it's a component of the retail investment product. It's not designed as a retail investment product. The volatility in it is way too high for that. But you can see that the performance is really very, very strong. So this red line, sorry, it's all a bit small. This shows Rose AI trading on Bitcoin, and the blue line is the underlying asset, which is Bitcoin if you just held that asset. And to date, it's up an incredible 65%, which we're very happy with. And as we wrote a blog article about, it called the COVID crash in March of this year, and we started to see these really fantastic returns. We've got some more data on this, which I'll just share quickly because it's quite interesting. This chart here pulls the correlation of Rose AI performance versus Bitcoin, the underlying asset. And what algorithmic traders want to see is they want to see a lack of correlation. The reason being is if you have a strong performance, you could be challenged and said, well, actually you've just bought Bitcoin and followed it. But actually that's not what we're doing. We're going long and short depending on what the data from the crowd and Rose AI is telling us and those trading signals. And because of the lack of correlation here, it says that we're not just holding Bitcoin and holding it and enjoying the returns. So this is quite an interesting chart actually, because it gives insight into the amount of alpha that we're generating versus the underlying asset. I hope that made sense. It's a bit technical if you're new to the subject. And this chart here as well shows the percentage of correct calls from the Rose AI trading system. So again, we've written a blog about this on medium.com/Pynk. Do go there, have a read about it. But essentially what it's saying is that we're actually out of the market 78% of the time, and we're in the market 21.7% of the time. Now that's a crucial thing to understand, because very successful algorithmic trading systems know when to be out of the market as often as they know when to be in the market. And those that don't lose money when they're in the market, and they shouldn't be. So it's really important that the system knows when to trade and when not to trade. That's the first thing. The second thing with the pie chart on the right is the percentage of correct calls to incorrect calls. So the incorrect calls are 18.2%, meaning that when we're in the market, the system is correct a staggering 81% of the time. So when we speak to professional investors, this is the data and information that we're sharing, and it's why we know that this crowd wisdom AI system works so effectively, and it's a key component in us being able to generate these very high returns despite the high volatility in the market. So I know I've just shared quite a lot of technical information very, very quickly there, but I hope that made sense. Seth, do you want to add anything to this? Because this is certainly your area of expertise.
Yeah, I mean, yeah, I thought I would have gone for that answer, but yeah, you pretty much nailed it, guys. Yeah, we don't have extensive back testing because we have the limitation that it can only go back as far as when we started collecting the data. But other than that, we've got a very good track record for the period of time we have been collecting the data, and it's real results. It's not just back tests, which tend to just be overfitted. So people will test and test and test, and it's similar to the problem that you get when you're copying other traders, right? You find something that looks great until that point in time, and then you go forward in time, and it doesn't work as well. Our system has been actually what we've achieved with real money.
Should probably point out as well that the assets and the management that we got at the moment, yeah, all of the founders have our own money in there. You know, this is not this isn't just traded a random investor capital. Yeah, we're confident in our own positions, and we take the same positions as everybody else on the team.
Fantastic. Thanks, guys. And the second question from Louis was, when are you going to provide an ISA conduit into the retail product? So, Ru, I think you're probably well placed to answer this, but just bear in mind for everyone on the call who are outside of the UK, ISA is a tax benefit for UK retail investors only.
Yeah, and a pretty poor tax benefit in my opinion anyway. But you're very limited on which assets you can trade in an ISA product. So we do have the ability to do it, and we will have the ability to do it from launch. We probably won't be doing it from launch. I suspect if we are able to, it will be in the first quarter of 2021, in the run up to year end in April, because that's the time when everybody is searching and looking for ISA products. Yeah, and on the team, we're not super fans of them because of the poor performance that the underlying assets that you can get into is. So if we have the data on those underlying assets and we think it's a good opportunity, and we can provide the same level of risk versus reward as we do on our current products, then yes, we'll be doing an ISA product. We have the regulations ready for them.
And the same applies to the previous answer. You know, we're trying to make what we do as widely available as possible. So complying with the regulations in each country is a big undertaking. It's quite costly. So we'll be doing that first as the main priority, and then we'll be looking at how to integrate with these additional tax incentives again on a country by country basis. So we'll be rolling that out after the initial product.
Fantastic. Thanks, Ruth. Thanks, Seth. Okay, so the next question was actually a comment. Dr. Tresca is very funny. The great points about MySpace and Facebook, touche. I still remember MySpace also. Kate, revealing your age there. But yeah, Stefano is very funny. Next question was from Carlo. Okay, I can take this one. So how many users predictors would you be satisfied to have in a couple of years? So for those that on the call that are new to Pynk, we now have 30,000 signups for our price prediction tool. And when we started this project 2 years ago, you know, we really had to sit down and think about how are we going to bring on these predictors without any budget. And we're chuffed is the word. I'm very happy with the rate of growth of our crowd because for a number of reasons. One is the larger the crowd, the more predictions we get. So we get more quantity and volume of data into Rose AI. But also we find that over time, that crowd, they get better at predicting. So the quality of the data and the predictions is improving as well. But one of the reasons that the crowd has grown so quickly, we believe, is because going back to this symbiotic business model, Pynk is built around serving Pinksters around the world. It all starts with the people that we serve. And we believe that because we've designed the business model in this way, that's why we're getting this rapid sign up in the crowd. And bear in mind, we don't have big marketing budgets at the moment. We don't have any marketing budgets, unlike the likes of Robinhood and Free Trade and eToro and these other companies that Seth was talking about earlier. So it's organic growth in the crowd so far. And we're very happy with that. In answer to your question, Carlo, we want to get to hundreds of thousands and one day, maybe millions. Now, we can't say how quickly we're going to get to 100,000 from 30,000 today. But I'm quietly confident that we can get there fairly quickly. You know, in the next 12 months, I'd like to say. I don't want that to go on record, although I recognise it just has.
Well, I mean, Mark,
too late.
Your KPI for the end of the year is one of them.
There it is. I've just written it. Yeah. So yeah, we want to make the crowd as big as possible, and the reason for that is because, as I was saying, it's about the quantity and quality of data going into AI. But clearly, we want to serve as many Pinksters around the world. We want everybody to come into this global movement. That's what we're creating here, because we genuinely want to improve the lives of hundreds of thousands, if not millions of people around the world. That's why we believe Pynk has the potential to change the world of finance and disrupt, because we're all working together on this. This is a unique approach to retail investing, building financial futures. So yeah, so in answer to your question, Carlo, we're very ambitious with regards to crowd growth, and hopefully we'll be getting there pretty soon.
And if I can add something about that, I mean, the time of crisis that we are living in, it's definitely helping. It's bad to say maybe, but all the big companies, all the big startups, they were born in time of crisis. You think it's we had the first crisis in 2001, what we call the dot-com bubble. And we had another crisis, of course, that everybody remember in 2008, 2009. And if you go back and check, Google, Amazon, all the big company, they really grow when there were not really a lot of capital to be given all around to everybody asking. That was the case a couple of years ago. Like, yeah, every person with a crazy idea could go to venture capital and make money. And now it's not working like this. So on one side, we have an international crisis that is going to help, because venture capital and funds, they want to invest on companies that are solid, that are not just like marketing fads, but growing organically. On the other hand, this specific crisis is the first one that is not just coming from the market. So it's not just an investment crisis, but it's also a production crisis, because companies are shut down because they cannot build, because people cannot go to the restaurant and to the factories, and they need support. And again, it's not just the developing countries where a lot of people are unbanked, they don't have a bank account. It's the UK, it's Italy, it's Spain, it's Germany. So on one side, you are very attractive for the big investor, like the venture capitals. On the other side, you're also going to help all these little B2C consumers that can join like a community and trade. And I mean, to be fair, I do some trading. Many of the people, they don't have the skills and the time, and especially if you have a small capital, if you have £5,000 to invest, or $5,000. You're probably not going to spend 20 hours per month or per week to learn how to trade. You're just putting your money there in the bank, hoping that nothing happens. And banks is going to give you 0% interest rate. And so it's, I think that definitely what I've seen in around the 2000 and around the 2009, these kind of projects are growing much, much faster than expected during this kind of time.
Yeah, thanks, Stefano. So definitely there's a real need for this globally. And you know, in the fintech sector, everybody is saying that the companies that survive through these tough times are the companies that are going to be around in 10 years' time. So we're working hard to make sure that Pynk is one of those companies. Okay, so we have run over by 25 minutes or so now, so we're going to start wrapping up. I'm just going to touch on one final question from Anoop, who's a crowd member, about KYC. Zach, who's in our team, many of you will know Zach's name, is asking people to drop an email or go to the Telegram groups for KYC related questions. We know that KYC is a bit painful at times. We need to do KYC as a matter of regulation in the UK. So, you know, we need to play things by the rules. That's why we do it. So apologies to any Pinksters who are having challenges in that area, but we will help you through KYC as much as possible. Seth, do you want to give any final comments before we wrap up?
Well, the only one from me is a massive thank you to everybody that has joined the AMA. A massive thank you to all those who are in our Pynk community, and a massive thank you to all those that have already invested in the Seedrs crowdfunding campaign. You are the reason why we are here, and yeah, thank you very much for believing in us and believing in the mission of the company.
Same here, yeah. Thanks to everybody, and you know, whatever your input is, it's very valuable. It's highly welcomed. We are building this project together. We need your help, support, your advice. We need you to bring in other people that we can help. And so, you know, things have been going great so far, and we just want you to stick with us, believe in us, and we can do this together.
Fantastic. Thank you, Seth. A big thank you from us as well to Stefano for joining us today. Stefano is very busy working with multiple fintechs in London and further afield. So thank you, Stefano. Your thoughts and comments appreciated as always. And a big thank you from me to the crowd and to all of the Seedrs investors. Just to echo Rupert and Seth's comments, it's very much appreciated. So thank you for today. We've really enjoyed doing this AMA session. We'll do a follow-up soon. Stay with us and stay in contact. Thank you. Bye-bye.
Guys, bye.